Hello, everyone, and welcome to yet another chapter on US taxation. So, in the previous chapter, we answered an important question: who is required to file taxes in the United States? We discussed income thresholds, filing requirements for individuals and businesses, special exceptions, investment, estate gifts, and excise tax filing rules. And we also discussed that what are the threshold basis which the return needs to be filed. Now we move to even more foundation question. Before deciding who must file, how does the IRS decide who are you? Because in US taxation, everything starts with the tax residency. You might be an US citizen, a resident alien, or a non-resident alien. And each of these classifications determine whether you are taxed on the worldwide income or only on US source income. Which tax return you file, what deduction and credits you can claim. This chapter is extremely important because residential status decide your entire tax exposure. Two people earning the same income can pay completely different taxes simply because their tax residency status is different. So in this chapter, we will clearly understand who is considered a US resident for tax purpose, who qualifies as a resident alien, how the green card test works, how the substantial presence test works, who is classified as non-resident alien, and how taxation differ between all three. So to start this, let's move to the first slide and look at the agenda. Okay, so now we'll quickly have a look at the agenda that we're going to cover as a part of this chapter. So we're going to cover the concept of tax residency and why tax residency matters. We'll have a look at that who is a US citizen for the tax purpose, the concept of the US citizen as per the tax rules, who is US resident alien, concept of green card test and how it works. We'll also have a understanding of the substantial presence test, and we'll have an understanding that how it works, who is non-resident alien, taxation difference between a citizen versus resident versus non-resident alien, concept of the worldwide income versus the US source income, and then a quick snapshot of what we have covered as a part of this chapter. So let's begin the discussion and move to the first slide. Okay. Now, when we try to cover why tax residency matters, we are actually going to touch base upon the certain points that what is going to achieve and what is the importance of the tax residency. So, tax residency determines how you are going to get taxed. So, in the United States, tax residency decide what income is taxable. So, as we discussed in the agenda, that there are largely two concepts, which is worldwide income and US sourced income. So, that will be getting determined basis the residential status. Which tax form you must file, again dependent upon the residential status. There are different set of forms that needs to be filed. Which deductions or credits you can claim, again depending upon the residential status. There are certain set of deduction which cannot be claimed by the non-resident alien and the person who are not the US citizens. Which tax rules apply to you? So it is one of the most critical concept in the US taxation. And if we quickly have a look at the key objective of determining the tax residential status. So first of all, it helps us to determine the scope of the taxation. The biggest impact of tax residency is how much of your income is going to get taxed. So if a person is a US citizen, then the worldwide income is going to tax. If resident alien, then again the worldwide income is going to get taxed. Who is the one who is non-resident alien, then only the US source income is. And we are going to have the clear understanding on the concept of the worldwide income and the US sourced income in the upcoming slide. But for this slide, we need to understand that why it matters, because a different residential status will invoke a different concept of taxability. Second is determine which tax return to file. For a citizen and resident, form is 1040, but for a non-resident alien, it is a 1040 NR. Third is determine the eligibility of the deduction and the credits. So many tax benefits are available only to the residents. Residents may claim the standard deduction, child tax credit, education credit, earned income credit, and non-resident have the very limited deductions. So as an example, US citizen working in India. So US citizen working in India, what does this mean here? So which means that a person who is a US citizen but is working in the India, salary earned in India still taxable in US because he is the US citizen, and hence he has to pay the taxes on the worldwide income. So we'll move to the next slide and look at two more objective for understanding the concept of the tax residency matters. So we'll move to the next slide and look at the another two objectives and points that needs to be understood to determine the importance of the tax residency. Okay. So another two points that needs to be understood very in detail to have the complete understanding on the importance of the tax residency status is again the fourth point is determine the reporting of the foreign assets. So US citizen and resident must report the foreign bank account, foreign investment, foreign businesses. Non-resident usually do not, and determine the compliance and the risk penalties. Incorrect tax residency classification can lead to the incorrect tax filing, penalties and the notice, and the double taxation risk. So tax residency determines what US can tax and what benefits you get. So very important. So having understood the concept of the tax residency, we will now move to understand in detail the different residential status that are available in the US taxation. Okay. So we'll talk about the first categories about which is the US citizen. Now, when we talk about the US citizens, definition of the US citizen from the tax perspective, for a federal tax purpose, a US citizen is a person who holds US citizenship under the US law, regardless of where they live. So, which means that a person who is citizen of US is liable to pay the tax on the worldwide income, irrespective of the fact where he lives. Tax residency of the citizen is based on the citizenship and not on the physical location. Very important point. So who qualifies as a US citizen? A person is a US citizen if they are born in the United States, which means that includes all 50 states and the US territories. So anyone who is born in the United States is treated as the US citizen and his worldwide income is taxable. Born abroad to a US citizen parent. Citizenship can be acquired by the descent. So which means that a person who is born in a country which is outside US, but their parents are the US citizen, that descendant will automatically become the US citizen. Next is naturalized citizen, foreign national who becomes citizen through the immigration process. So basically, once a person who apply for the green card and he got the green card, then they have to stay here, stay in US for certain number of years. Then he can apply for the US citizenship. So the person who become the US citizenship through the normal immigration process after obtaining the green card, that is also treated as the US citizen. So US is one of the few countries that taxes citizens on the worldwide income, even if they live outside the US, work outside the US, earn income in any other country. So which means that example like citizens living abroad, US citizen working in India earns salary in India must file the US tax return 1040. They can definitely claim the benefit of the double taxation through which is there as per the DTAA double tax agreement between the US and the India. That's a treaty agreement. They can claim the benefit, but they have to file the return in the US because they are the citizen of US. Foreign tax credit may apply, but filing is mandatory. The filing requirement for US citizens. So US citizens generally file 1040 form if income exceeds filing threshold, regardless where they live. May also need to report the foreign bank account and the foreign assets. US taxation is based on the citizenship and not on the residency. Government expects citizens to report the global income and the financial asset. Very important. So again, when we talk about the US citizens, the concept is that the person should born in India, should born in US, sorry, and that person who is born in US, that is the US citizen. If a person who is a child of parents who are citizen of US, then also that person becomes the citizen of US. And third category is the naturalized citizen, whereby the person becomes a citizen of US through the immigration process after obtaining the green card and staying in US for a certain number of years. He can then become the US resident by filing the necessary immigration papers. So once a US citizen is established, then he has to file form 01040 if the income exceeds the threshold limit, and he has to report all his worldwide income during that particular period, and then he can claim the benefit of the double taxation benefit. This is a treaty arrangement between the US and the other country in which he is earning the salary. So we'll move to the next slide. Okay. Now, having understood the concept of US citizen, the next category is who is US resident alien. So which means that he is not a citizen, but he is US resident alien, and a non-citizen is treated as US resident alien for the tax purpose. So which means a person who is not the citizen of US, but he is treated as a resident alien on what conditions? So we'll look at those conditions here. A resident alien is a person who is not a US citizen but treated as a US resident by the IRS for tax purpose. Resident aliens are treated as almost the same as the US citizen, which means that as far as the consequences of tax are concerned, filing of the forms are concerned, and the treatment of the taxing the worldwide income is concerned, the concept is same for the US citizen and the US resident alien. But the difference in terms of US resident and US citizen is that US citizen may enjoy certain other political rights like right to vote, which is not available to the US resident alien. But for the tax consequences and the tax purpose, the tax consequences are same for a US citizen as well as the US resident alien. So two way to become a US resident alien is that okay, why this category exists? Many people live and work in US without the citizenship. The IRS use residency rule to decide when a non-citizen should be taxed is like a US resident. And two way to become the resident aliens. First is that a person becomes a resident alien if they meet either of these tests, which is the green card test and the substantial presence test. So a person who is not a citizen of US and he or she passes the green card test, or he passes the substantial presence test, then he will be treated as the resident alien. So passing any one of the tests make you resident alien. Taxation of resident alien is resident aliens are taxed on the worldwide income same as that of US citizen. And filing the form is again 1040. So example, worker in the US earns US salary, interest income in India, both must be reported in the US return. So, which means that both the tests, either of these tests is to be passed to become the US resident alien, and we'll talk about each of these tests in detail in the upcoming slides. So, we'll move to the next slide. Okay, now having understood who is the resident alien, now we are going to understand that how they have to pass the green card test and what exactly card test is. So, a green card test is becoming a US resident through the immigration status. The green card test is the simplest way to become the US resident alien for the tax purpose. If you hold a green card, the IRS generally treat you as a US tax resident. So, which means that a person who holds the green card will automatically be treated as the resident alien, and the tax consequences of a normal US citizen will be applicable to that particular individual. What is the green card test? You pass the green card test if you are a lawful permanent resident of the United States at any time during the tax year. This status is issued by the US Immigration Authority, not the IRS. So, which means that you have to apply for the green card. So we'll going to talk about that. So you have to apply for the green card, and you can apply for the green card after meeting certain conditions. And what are those conditions is dependent upon the immigration process. You are a lawful permanent resident of the United States at any time during that tax year. So which means that if at all at any time during that tax year you have applied for the green card and you got that green card, from that day onwards you are treated as the US resident alien, and all the tax consequences of filing the return and in reporting your worldwide income will be applicable to that individual. And the most important point is that this status is issued by US immigration authorities and not the IRS. IRS simply take the cognizance of the fact that they have treated as the US resident, US resident alien, and then they have to follow the rules and the methodology which is equivalent to US citizen. So if you have a valid green card, you are treated as US resident even if you live outside the US, even if you spend very few days in the US, and even if you earn income in any other country. So what are the tax consequences? Passing the green card test means worldwide income become taxable in US, same treatment as that of US citizen. And when does this residency begin? This is very, very important. So when is the triggering point for claiming this that you have achieved that status of the resident alien? So tax residency starts from the first day you are physically present in the US as a green card holder. During that year, green card residency ends only when during that year. So which means that if let's say you have obtained the in the middle of that year, it is assumed that from that year onwards you have to report your entire taxes and entire income as a worldwide income. So green card is officially, and when does it cease to exist? So when green card is officially surrendered or status is revoked by the US Immigration Authority. Simply leaving the US does not end tax residency. So which means that it is obtained once you got the green card. That is the date from which day onwards you will be treated as the resident alien. And when it ceases, it only ceases when you have surrendered the green card or when it is revoked by the authorities because of any concerns, which is any anything which has been done which is against the rules by the immigration authority. So which, if it is revoked, then you automatically cease to be the resident alien. So example, person received the green card in the month of October, considered resident alien for that year. So which means that the moment you get the green card, you are treated as a resident alien. So we'll move to the next slide. Okay. Now we know that to become the resident alien, either of the two tests needs to be passed. One is the green card test, second is the SPT test, which is called the substantial presence test. And what does this mean? Becoming a US resident based on the days in the US. The substantial presence test determines the US tax residency on the basis of the physical presence in the United States. It applies to the people without a green card. So which means that if a person is not having the green card, but if he or she passes the substantial presence test, then he automatically become the US resident alien. What is the purpose of this test? The IRS uses this test to identify the individual who spent enough time in the US to be treated as the tax resident. Rules to pass the SPT test is that you are resident alien if you meet both the conditions. So which means that to be the to pass the SPT test, both these conditions needs to be met. And what are those? Present in US at least 31 days in the current year. So in the year in which you are currently living, you have to spend at least 31 days in the current year, and present in US at least 183 days over the 3-year period. So last 3-year period, if you are there for 183 days, then you are treated as the resident alien for the purpose of the tax. So which means that you have to pass 31 days in the current year and 183 days over the period of 3 years. And this how 183 days how it is calculated. So 3-year calculation formula is based upon the table below. So IRS uses the weighted formula. Total must be greater than equal to 183 days. So what are these? For the current year, they take 100% of the day, previous year 1/3 of the day, and second previous year they 1/6 of the days. So they use this formula to calculate the number of days to arrive at the 183 days, and then they will treat the person as the resident alien. So quick example below: if somebody has to determine the residential status for the year, let's say 2024, then in the 2024 that person is in the US for 150 days, which means that it passes the first test of 31 days. Now how have to calculate 183 days? So present in the US is 180 over the 3 years period. So for 2024, he is there 150, which is that 100% of the days. For previous year, 1/3, which is 120 days. 1/3 of that is 40 days. Second previous year is 1/6 of the days, which is 120 days, which is 20 days. And if we add up all these, this becomes 210 days. So which means he passes both the tests. He was there in the 2024 for 150 days, and he was also there in 183 days for the over 3 years period. And with this formula, he is there in the 210 days. So tax consequences of passing SPT: if SPT is met, person becomes the US tax resident and must report the worldwide income and file the form 1040. This is very important. If the person who becomes a resident alien and he do not report his worldwide income, he only reports his US source income, then he has to face the consequences and the penalties and the prosecution, as the case may be. So we'll move to the next slide. Okay. Now we are going to talk about the third category, which is the non-resident alien. So a non-US person, for a US tax purpose, a non-resident alien is an individual who is not a citizen. He is not a citizen of India, obviously, does not pass the green card test, and does not pass the substantial present test. And if all three are true, person is treated as non-resident alien. So which means that this is called the residual category, which means that a person who is not a US citizen, if he is not the resident alien, then obviously he is a non-resident alien. A typical example of NRA is the tourists visiting India, international students, temporary workers, short stay, foreign investors in the US markets, foreign property owners in the US. Taxation for non-resident aliens are unlike citizen and residents. NRA are taxed only when they are sourcing the income from the US source income. Foreign income is not taxable in the US. So limitation for NRA compared to the resident NRA, they have limited deduction. They usually cannot claim the standard deduction, have limited tax credit, followed a different tax rule and the rates. And their form is 1040 NR. This return is reports only the US source income. So example of US source income is that salary earned in the US and business income from the US activities, rental income from the US property, interest dividend from the US. All these are treated as the income which is being sourced from the US source. So this clearly helps us to understand the three categories in detail. So we discussed about the US citizen, we discussed about the resident alien, now we discussed non-resident alien. So we now move to the next slide. Okay, so for clear understanding, we have created a comparative table here, and we can quickly have a look at this comparative table to understand that how these three different status act differently when we are talking about the taxing the US individual. So US citizen, who they are person with the US citizenship. Resident alien is non-citizen, treated as a US citizen, US resident for the tax purpose. Non-resident alien are non-citizen not meeting the residency test. How status is determined for US citizens birth or the naturalization. For resident alien, it is green card or substantial presence test. For non-resident aliens, they fail both the residency test. So tax scope, worldwide income is taxable, worldwide income is taxable, only the US source is taxable. Main return is 1040, 1040 to 1040 NR, and rest of the things we have already looked into that for global tax for US citizen and the resident alien, their worldwide income is taxable, which means all incomes are taxable. But for non-resident, the income is only taxed if it is sourced from the US. So subject to the self-employment tax, only sourced from the US business, US real estate or US situated asset. Only the US income is taxable. Rest of the income they need to report in the country in which they are citizen of. So we'll move to the next slide and have a quick look what is the concept of the US source income and the worldwide income. Okay. Now, having understood the concept of the residential status, and then we also, quickly showcase the comparative analysis between the U.S. citizen, the resident alien, and a non-resident alien. We'll try to explain the concept of the worldwide income versus the U.S. source income. So criteria, who is taxed on it? The worldwide income is taxable for US citizen and resident aliens. For US source income, that is only taxable for the non-resident alien. Worldwide income scope is income earned anywhere in the world. US source income is that income earned connected for the US activities or assets. So for worldwide income, it includes the foreign salary, it includes the foreign business income, it includes the foreign rental income, it includes the foreign investment. But for US source income, it only includes the US salary, include the US business, include the US rental income, include the US stock or dividend or interest, include the US real estate gain. A main taxpayer affected by the worldwide income is a citizen, then resident alien, and the main taxpayer affected by the US source income is the non-resident alien. And tax return is being used 1040 for the US citizen and resident alien, and it is 1040 NR for the non-resident alien. So with this, we come to the last slide of this particular chapter, and the attempt of this chapter is to help the viewers and the users to understand the concept of the residential status because this forms the base of taxing by the US authorities. So we'll move to the quick snapshot slide where we'll try to cover what we have all discussed in this particular chapter. Okay, so what we have learned in this chapter. So before calculating the tax, the IRS first determined the residency status, and this chapter, this decides how much of your income the US can tax. For US citizen, it is birth or the naturalization. Resident alien, green card or the substantial present test, and non-resident alien is the fail both the tests. So we have US citizen, income tax is worldwide income, resident alien, worldwide income, non-resident alien, only US source. So tax form for citizen and resident is 1040, non-resident is 1040 NR. Choosing the correct form is the critical for the compliance. Key residency test for to remember is a green card test, immigration status based. Substantial presence test is based on the US and passing the test is either of the test is equal to the resident alien. A big picture learning is that tax residency determine what incomes must be reported, which deductions and credit applies, and which tax rule to follow. So we'll move to the final thank you slide and we'll quickly see that what we are going to cover in the next chapter. With this, we complete one of the most important chapter in the US taxation, which is the residential status. Today we learned that before calculating tax, before applying deduction, and before filing any return, the IRS first asks one fundamental question: what is your tax residency status? We understood the three core classifications: US citizens, resident alien, and non-resident alien. We also studied the concept of the green card test, substantial presence test, and the difference between the worldwide income and the US source income. This chapter is critical because the tax residency determines the scope of the income taxable in US, eligibility for deductions and credit, reporting obligation, and the compliance exposure. So two individuals earning the same income may have completely different tax liabilities purely because their residency classification are different. So now that we know who you are for the tax purpose, the next logical step is how does your filing status affect your tax calculation? So in the next chapter, we will explore the filing status, which is single, married family, jointly, head of household, and more. Because once residency is determined, filing status directly impact your tax liability. So we're going to come with a new chapter very soon. Until then, thank you, goodbye, and have a nice day.